I analyzed more than 10,000 trades in the last video, and that's not a typo. I literally tested and analyzed more than 10,000 trades with 50 different trading strategies. I didn't just test in one market condition, but across multiple conditions, from good to bad. But the 10,000 trade data proved something that most traders never really want to hear, especially the ones selling you $10,000 worth of courses. You can watch the previous Trading Rush video to learn more about this tested data in detail. But in simple words, the data proved the following. Imagine you are a famous basketball player. In a nice room with clean floors, you throw the ball into the basket 70% of the time. That's a pretty good accuracy, and naturally, you feel good about yourself. But then, someone blindfolds you, spins you around 3 times, and then makes you throw the ball on a muddy field, in the rain. This time, you are hitting only 35% of your shots, and your accuracy has dropped significantly. You went from a 70% win rate to a 35% win rate. But here's the thing. Your skill did not get worse. The reason for your loss was the person who thought rain basketball was a good idea. That's exactly what this 10,000 trade data proved. In bad market conditions, most trading strategies performed horribly. They had a low 30–40% win rate, but those same strategies, with the exact same rules, achieved a really high 60–70% win rate after simply filtering out the bad market conditions. So, the strategy doesn't decide whether you will get a high win rate or not. The market condition itself does. This is quite annoying because we cannot simply buy a better market on the internet. But this also proves a really important thing. If we forget all the secret strategies and indicators the $10,000 trading gurus are selling, and just focus on filtering the bad market out, our win rate will automatically go way higher. So, how do you actually identify and filter out the bad market? Well, I am going to share 7 methods in this video. Many of them are also tested and have data-backed proof of increasing the win rate. The rest of them are based on my 9 to 10 years of live trading experience. To prove that these methods have actually helped me increase my win rate, here's the profit graph of the live trade setups I have shared with Patreon supporters on the Trading Rush Discord server. All these trades were shared in the live market over the years. These also include the worst market conditions, such as market crashes. Because I use the methods I'm going to talk about next, I managed to survive the horrible market conditions and still managed to make a profit in front of a live audience. So, here's the first method I used to increase my win rate, along with its tested data. Now, in simple terms, if you are a trend trader, anything that is not a strong trend is a bad market for you. That sounds obvious. But when I was a beginner trader, every price movement looked the same to me. For example, on this chart, many traders will say the price is in a strong uptrend because it is clearly moving up and up. But this exact thinking resulted in many losses in my beginner days. Even though the price is moving like a good uptrend at first glance, it actually has 2 different kinds of movement. The first is a good, strong trend, and the other one is a slow trend. Both of these movements are pushing the price higher. But in the second kind of movement, if I draw a black box like this, you can see that the price actually stayed in a sideways direction. The entire movement that happened inside this black box didn't really push the price higher, like an uptrend. Yes, there can be pullbacks in an uptrend from time to time. But in the second type of uptrend, the majority of the price movement was moving sideways and not really pushing the price higher. If we are strong trend traders, then this kind of slow movement is really bad for us. Because according to the 10,000 trades data, this is where our win rate automatically drops. It becomes more clear if I hide the rest of the price movement. As you can see, if you had taken trades thinking this was an uptrend, these big downward moves and the overall sideways movement would have had a higher probability of triggering the stop loss. I know that spotting this kind of slow movement can be really difficult. But over time, I did figure out a simple method to filter out the slow movement very easily. You see, if we put a 200-period moving average on the chart, in extremely good and strong trends, where the win rate is high, you will notice that the price stays far away from it, something like this. But when the market gets slower, the price starts crossing the long-term moving average quite frequently, and it also stays closer to the 200 moving average. To prove how effective this is, a while back I created the TREMA, or the Trading Rush Moving Average, which disappears like magic, or becomes black in slow-ranging markets, something like this. As you can see on this chart, when the price was moving in a good uptrend, the Trading Rush Moving Average showed it using a green color. But when the price started getting slow and ranging, the TREMA disappeared, or became black. When I created this indicator, I also tested it in a video to see if it actually improved the win rate or not. The amazing thing is that, even though this method of filtering out the slow and ranging market is really simple, during testing, it actually doubled the profit amount. It improved the win rate by around 5 percentage points, which doesn't sound like much, but that directly doubles the profit amount made over time. The worse the strategy is at removing the slow and ranging markets, the higher the win rate will be with this method. Like all Trading Rush indicators, the TREMA is 100% free. You can find it on the official Trading Rush website under my indicator section. Tested method number 2. In my beginner days, I was a price action only trader. Meaning, I looked at the price movement directly to make all the important decisions. I did not use any indicators. That kind of trading style is still very popular. But during my beginner days, I found a really interesting pattern because of price action only trading. You see, on this left chart, the price is in an uptrend. And on this right chart, the price is in an uptrend as well. But interestingly, on one of these charts, I was losing way more trades than on the other chart. To show you what I mean, imagine that you and your friend are in a car. Your friend is driving and you are holding a glass of wine. On a smooth road, you have no problem drinking your wine because the car is not vibrating too much. It's a smooth ride. But then the moron friend decides to take a shortcut through a muddy gravel road, and the car starts vibrating like it's going to fall apart. Your wine is now spilled all over the place, and everything is ruined because of the choppy road. That's exactly what's different in these two uptrending charts. You see, on one side we have a clean movement where the price is clearly moving up and down. On the other chart, the up and down movement has its own up and down movement in between, like crazy vibrations. It's more noticeable on these side-by-side charts. As you can see on this left chart, the upward and downward movements have a more continuous direction. On the right side chart, the upward movement has many downward moves in between, and the downward movement has many upward moves in between. It is all back and forth movement, even though the overall move is in an upward direction. This back and forth movement is called a choppy market, and this smooth, one-directional movement is a clean market. I lost more money in the back and forth choppy trends, and made money way easier in the clean trends. The best part is that losing also taught me how to identify and filter out this choppy movement. See, as a price action trader with no indicator, I directly tracked how the candlestick patterns were forming. For example, in a choppy movement, candles will switch directions frequently. They will turn from green to red to green, back to back. But in a smooth, clean market, the upward move will be more green candles back to back, with a little bit of red in between. And in a clean downward move, there will be more continuous red candles, with only a little bit of green in between. So, if I saw a continuous green and continuous red pattern, I considered it a clean movement. If the candles were switching their colors and direction frequently, then I saw it as a bad, choppy movement. But the thing is, when I started trading with indicators, I turned this method into the Trading Rush Choppy Market Indicator. Basically, this indicator shows a line that goes higher when the price movement is cleaner. The line drops to near zero when the price movement is choppy and switching direction frequently. And just like all my indicators, I tested it many times in a previous video to see if it actually improved things or not. With the Trading Rush Choppy Market Indicator, the win rate improved by around 10 percentage points. If your strategy already filters out the bad choppy market, then this will have little to no improvement on the win rate. But in my own trading journey, filtering out the choppy market using this candle color method had a massive improvement in the quality of trades and the win rate. Just like all my indicators, the Choppy Market Indicator is available for absolutely free on the Trading Rush website. Tested method number 3. Imagine you are going for a walk and you see a single cloud floating in the sky. So, you decide that it will be a clear enough day and you won't need an umbrella. But at the same time, a plane flying 30,000 feet above your head sees a completely different story. The pilots can spot a massive storm heading right toward you. The single cloud and the sunny-looking sky that you are staring at are definitely real. But it's just a small story in the big picture. If you go for a walk while making decisions based on this cloud, then 20 minutes later, you are definitely going to get wet. A similar thing used to happen to me in trading as well. When I saw an uptrending chart like this, I used to take a trade in the upward direction. Soon after my entry, the price used to completely reverse its direction. The uptrend used to finish as soon as I entered the trade. But after I gained enough live trading experience, I realized that this was similar to looking at the single cloud while making decisions. On my smaller entry time frame, the uptrend strongly turned into a downtrend, because on the higher time frame, it was always in a strong downtrend. The uptrend I saw was just an upward pullback in this long-term downtrend. But when I started looking at the big picture and taking trades in the trend direction of higher time frames, my win rate improved massively. And since I like to turn things I find really useful into free tools, I turn this method into the free Trend Finder tool on the official Trading Rush website. The idea is that when I want to trade something, I look at the trend direction of the entry time frame and then make sure that multiple higher time frames are showing the same trend. This way, I first look at the smaller picture, like the single cloud, and then make sure that there is no storm coming by analyzing the bigger picture. If I saw an uptrend on the entry time frame, but the higher time frame showed a downtrend, then I knew that even though I could only see a single cloud in the sky, there was a massive storm coming that would move things in the opposite direction. And like all my tools, when I created it, I also tested it in its video. The tested data showed that with the Trend Finder tool, or when trading with multiple higher time frame trends, our win rate improves by around 10 percentage points. If you only look at the entry time frame and ignore the higher time frame trend, then there can be a massive loss on the account. So, trading in the direction of the higher time frame is better in most scenarios and has massively improved my quality of trades. Method number 4. Imagine someone is pushing a big boulder up a hill. Slowly and steadily, he pushes the boulder up and up. He looks weak, but still manages to make upward progress. But then, just before the top, he struggles to push it higher. He gets very close, but then loses all his strength and goes back down. He tries again and reaches the same spot, but then he fails to cross it and moves down again. It is clear that he is losing his strength and is not able to cross a particular level. There is something up there that is in the way of the boulder. But now, he is completely tired, and the big boulder crushes him and pushes everything all the way down. After an upward move like this, I used to buy in the hope that the trend would continue. But somehow, I was ending up taking trades near the end of the trends. But then I realized that price movement is just like the big boulder. First, the buyers push the price higher and higher, but then, at some point, they get tired and lose all their strength. They can no longer reach a new high point, so the price moves back down. Many times it becomes slow, and then, when the strength is completely lost, the trend fails and the price completely reverses. Since I was a price action trader at this time, my solution to avoid taking a bad trade and getting stuck in it ended up being a simple price action logic. You see, if I saw that the uptrend couldn't cross the previous high, I just stopped taking new buy trades in it. I saw it as the buyers losing their strength. If buyers are not strong enough or interested in buying at these higher levels, then I am also not interested. This simple logic has saved me a lot of money and improved my overall win rate. Method number 5. Imagine you are driving a car. It's a beautiful day, and you are really happy. But then, suddenly, a lot of black smoke starts coming out of the engine, and you see multiple warning signs on the screen. You start panicking, and now everything is falling apart. So, you stop the car to see what's wrong with it, call the mechanic, and then fix it. It turns out that there was a serious problem with your car. The mechanic said that if you hadn't stopped at the early warning signs, your car would have exploded, with you in it. When I was a beginner trader, I used to find a working strategy, and even used to make a good profit at the start. But then, I used to give it all back and even blow up the account. You see, in the early days, I thought the working strategy would work forever. I had no idea that the win rate of the strategy is directly dependent on the market conditions. When the market conditions were favorable, I used to win more and make money. But then, I used to give it back in the bad markets just as fast. It was just like the burning car. Even after seeing the smoke, I still used to drive, and my account used to explode in a downward direction. But in trading, we don't have a screen that warns us to stop doing what we are doing right now. Well, actually there is. You see, as a beginner trader, one of the best decisions I made was testing my trading strategies and then tracking my live trades performance. I used to track all my trades in an Excel sheet and used a profit graph to see all the progress, something like this. Because of the tested data, I used to have some win rate expectations while live trading. If my live profit graph matched that expected win rate and results, then I was happy, and everything was going perfectly. But if my profit graph started to go down more than expected, then I knew that something was wrong. As soon as I saw this abnormality, I knew that things had changed. If my strategy was working before, and I was still using the same rules, but suddenly getting really different results, the thing that has probably changed now is the market condition itself. After this, I would stop what I was doing and then adapt to the new market condition. And the best part is that, most of the time, after I adapted my strategies to the new market, the profit graph would move up by a great amount. The best example of this is the live trade setups I shared with Patreon supporters on the Trading Rush Discord server. You see, since there have been multiple market crashes, random tariff moves, and everything else that was moving the prices more randomly, the live profit graph had multiple pullbacks. This happened not just once, but almost every time the market crashed or was reacting to some news events. But since those market crashes and news events brought new trading opportunities, the next profit was also higher pretty much every time. There was a big spike in the profit graph, and all that profit was only possible because I adapted to the new market conditions by looking at the profit graph. If I had traded the same way as before, I would have suffered horribly in the bad market conditions. Here's my personal profit graph, which includes the bad market conditions as well. As you can see, there is a big profit spike right after I adapted to the new market conditions. And when the market turned normal, and I switched back to normal trading, the profit graph went up at a normal pace. Then, once again, when the market condition changed, it went down, and I adapted again. This is a more than a year-old profit graph, so it is a bit outdated. However, after this point, there is another upward move in the profit graph, which is made up of unrealized profit. To see what the latest unrealized profit is after this point, I went to the broker's website and copy-pasted the total unrealized and realized profit. This is what the latest profit graph looks like. Just a few months ago, the profit was even higher. This was before some Nobel Peace Prize winner decided to do boom boom in other countries. But since this last upward push is the total combined profit, it looks like a straight upward move. But in reality, it is more like an up and down movement that is overall moving in the upward direction like an uptrend. But the main point is that the only reason my profit graph was able to move up and up over time was that I adapted to the new market every time there was an abnormal downward move on the profit graph. You can do the same thing. Identify the bad market conditions using the profit graph and then adapt the strategies to make even more profit. Method number 6. Imagine you are flying a plane. You have taken off and everything is going smoothly. But then, suddenly, a big mountain starts appearing in front of you. Not only that, it starts getting bigger. It starts coming closer, really fast. But you are trained for this. You have thousands of hours of flying experience. You know exactly what to do in these scary scenarios. But you completely panic and start pressing random buttons that your fingers could find. Even with all your expert knowledge, you simply panic and cannot make the right decisions quickly. The plane crashes onto the mountain. There are big explosions everywhere, and your career as a pilot is done. You see, in real life, this situation would not have happened. Even if it did, the pilots wouldn't have panicked like babies. That's because, in all conditions, including emergency scenarios, the pilots are trained to follow their checklist. There is a checklist for taking off, there is a checklist for landing, and there is a checklist for emergency situations. There is a checklist for everything. So, even if the pilots wanted to panic, the checklist would tell them the steps they should take next and how to avoid this crazy scenario. If a big mountain appears, the checklist would guide them to simply take a right turn and change pants. We can all agree that trading can be really stressful sometimes. In my beginner days, if the price used to go against my entry, I used to panic and make random decisions that were not in my trading rules. Even though I had a lot of trading knowledge, when the time came to actually use it, I completely failed because I was only panicking. Then I started using the pilot's method for trading. Just like how pilots have a checklist for all kinds of scenarios, I made my own for trading entries, exits, and emergency scenarios. Since my entry rules were designed to take trades in good market conditions, I automatically avoided taking bad trades just by following the checklist. If I couldn't check all the boxes, then I simply didn't take any trades. Simple as that. Since this method helped me take better quality trades and improve my win rate, I of course turned it into a free tool as well. You can find the Trading Rush checklist tool on the official Trading Rush website for absolutely free. Method number 7. Imagine that every day you open the door and enter this house. This is your house. It even has a remote-controlled car that you can play with after finding the remote. But the next day, the room looks completely different. It's like you have entered a completely different house. But instead of panicking, you think your wife must have redecorated. So, you start wandering around. But you are never seen again. Who knows what happened? In trading, we have a normal, expected price movement, which is like coming to the same home every day. But then, our home starts looking different. The price movement is no longer the normal expected movement. On this chart, it is getting more chaotic. It is opening with big gaps and making strong, sudden moves that used to take months to occur. When I see a price movement that is different from the expected normal, I stop using my old strategies in this new market condition. Instead of identifying that the market has changed using my profit graph, this time, I can visually see a difference in the price movement directly on the chart. You see, one of the best things I did in my beginner days was take screenshots of the best setups and keep them for reference later. Because I had so many screenshots of good price movements and got used to how they looked, it became quite easy to identify that the market had changed when it did. I just had to compare this new movement with my hundreds of good movement references. To avoid entering the wrong house, you have to know what your normal house looks like. And when the house looks different, or when the price looks different, you simply adapt to the new market, as I did around January of 2025, and again in March 2026. Without these adaptations, my profit would not have gone up by a good amount. To see how I made 100% profit in a year, and to see live trade setups that made profits in the live market in the long run, support Trading Rush on Patreon. It's basically my current strategies applied in the live market and proof of if they work or not. The link is in the description. Thanks for watching.